personal lines jobs. Welcome to the quiz. Which of these factors would least affect a personal auto insurance premium? Is it A, the age and marital status of the principal driver? Or B, the color of the vehicle? C, the vehicle's make, model, and year? Or D, the driving record of the insured? The answer is B. Auto insurance premiums are heavily influenced by factors related to risk, such as the driver's age, marital status, driving record, claims history, and the vehicle's make, model, year, value, safety features, and repair costs. The color of the vehicle has little to no statistical impact on accident frequency or severity, according to most insurers and actuarial data. Age and marital status correlate with accident rates. Make, model, and year affect theft risk, repair costs, and safety ratings. Driving record directly reflects risk. Because vehicle color is generally not used in rating, it has the least effect on premiums. Next question. What does permissive use mean in the context of an auto policy? Is it A, the named insured has given the driver permission to use the vehicle? Or B, the state permits the vehicle to be on the road? C, the insurer permits the named insured to drive? Or D, any use of the vehicle is automatically permitted? The answer is A. Permissive use means a person other than the named insured or household member is driving the covered auto with the permission or implied permission of the named insured or family member, extending liability coverage to that driver. State road permission is registration. Insurer permission is not required. Automatic any use is not true, as permission is needed. Because permissive use relies on permission from the insured, this defines it. Next question. In a homeowner's policy, what does ordinance or law coverage help pay for? Is it A, fines from the city for having an unkempt yard? Or B, the increased cost to rebuild to current building codes after a loss? C, legal fees if the insured is sued by a neighbor? Or D, the cost of removing debris after a covered loss? The answer is B. Ordinance or law coverage in a homeowner's policy pays for the additional costs required to rebuild or repair a damaged structure so that it complies with current building codes, zoning laws, or ordinances that were not in effect when the home was originally built. Many older homes do not meet modern codes, and after a covered loss, such as fire, the insured must upgrade to current standards, which increases rebuilding expenses beyond kind and quality. Fines for yard maintenance are not related to insurance. Legal fees for neighbor lawsuits fall under liability coverage. Debris removal is usually a separate coverage or part of the basic claim. Because building code upgrades can significantly increase costs after a loss, ordinance or law coverage specifically addresses this extra expense. Next question. What does replacement cost coverage on a homeowner's policy mean for personal property? Is it A, it pays the original purchase price? Or B, it pays the actual cash value at the time of loss? C, it pays the cost to buy a new item of kind and quality without deduction for depreciation? Or D, it only applies if the item is less than 5 years old? The answer is C. Replacement cost coverage on personal property pays the amount needed to purchase or repair a new item of similar kind and quality without subtracting depreciation for age or wear. This allows the insured to replace damaged items with new ones. Original purchase price does not account for current costs. Actual cash value subtracts depreciation. Age limits are not standard. Because replacement cost ignores depreciation and pays for new equivalents, this is its meaning. Next question. Describe the coverage trigger for ordinance or law coverage. Is it A, when a new law is passed in the city? Or B, when a covered loss occurs and undamaged portions of the building must be torn down to comply with current codes? C, when the insured is fined for not maintaining their property? Or D, when the home is inspected for sale? The answer is B. Ordinance or law coverage is triggered when a covered loss like fire damages a building and current building codes ordinances or laws require demolition of undamaged portions or upgrades during repair, increasing costs beyond standard replacement. New laws alone do not trigger. Fines for maintenance are unrelated. Sale inspections are not covered. Because it covers extra costs from code compliance after a covered loss, this is the trigger. Next question. Regarding the liability coverage in a personal auto policy, who is considered an insured under the definition? Is it A, only the person named on the declarations page? Or B, the named insured, resident family members, and anyone using the covered auto with permission? C, only relatives who live in the same household? Or D, the lien holder financing the vehicle? The answer is B. In a standard personal auto policy, the definition of insured for liability coverage is broad and includes the named insured, any resident family members such as spouse or relatives living in the same household, and also extends to any other person who is using the covered auto with the permission of the named insured or a family member. This is known as permissive use. This wide definition ensures protection when others drive the insured vehicle with approval. Only the named insured would be too narrow since coverage extends to household members and permitted drivers. Only relatives in the household ignores permissive users. The lien holder has no role as an insured. They are protected under loss payee clauses for property damage, not liability. Because the policy protects the named insured residents and permissive users, this makes the broad group the correct definition of insured for liability purposes. That's it for today. Don't forget to like and subscribe. Tell us how many you scored out of 6 in the comments, and let me know what topic I should post next. Bye.